everybody gets scared by the, quote, commodity inflation. The Fed doesn't like that. They like stock inflation. They won't admit that term, but they like that. Or they like junk bond inflation. They don't like it when it goes into commodities. So commodities woke up without, in other words, some investors said, okay, I'm going to move into a low-priced asset category that's not going to go to zero. And it's been beat up for so long that the risk is off the page in terms of being definable, and therefore there's only reward. But when you look at the Bloomberg, it's really only one-third of the way back up to the price highs it saw in 2011. Now, gold, we know, peaked also in 2011 and collapsed 50%. Bloomberg collapsed more than that. But Bloomberg's only a third of the way back to the high, and everybody's screaming, how come gold's not exploding? Well, everybody's talking about how bad year it was for gold. Gold dropped 3.5% December to December close. Okay? So it wasn't that bad of a year. Yes, the miners got beat up, and silver got beat up more, percent basis. But by our metrics, they're still intact for more upside. In fact, we've got some numbers that aren't too far above the market that we want to see achieved that will indicate that silver and the miners are now in gear with what gold, I think, has done in the last quarter, which was cross some numbers that we thought were pretty important. But we also wanted to see silver agree with it and the miners agree with it, and they didn't. They came up close to our numbers but failed to cross them. Now, those numbers, those breakout numbers that we defined via our own proprietary methods, have adjusted down for this quarter. And it won't take a large rally at all for those metrics to be crossed, in which case then we see a chorus that says gold, silver, and miners all agree we're going back up. So that's what we're watching. But I think the pivotal asset category to watch is the stock market, also the junk corporate bond market. If those asset categories start to break, now they'll break our numbers before they alarm anybody else, but if they start to concern analysts, investors, and so forth with doubt, not necessarily with great pain, but with, gee, what's going on here?
Yeah.
If that starts to occur, the Fed's going to get nervous because that's an asset category that is off the page, bubbled, and if it starts to come undone, the Fed will have the greatest chore it ever had in its history, trying to save a bubble collapse that they created themselves.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel.
And it's going to be an intellectual problem for them, and it's going to be like sitting in a movie theater with some popcorn and laughing, as far as I'm concerned, because they've created a situation of their own, their own construction that could come unwound. And I think if we see those categories start to break down, that's when more and more investors are going to say, okay, I want to shift some money.
So how are the gold and silver shares looking right now? I know on the gold, GDX and GDXJ, are they anywhere near some important trigger points?
In fact, the high we made in November, if you go look at your charts and you see the silver high was up at 2550 area. And they failed to close over a certain level that we needed to see exceeded on a weekly close to generate what we call a quarterly buy signal. So they failed to do it, though gold did. But silver didn't agree. So then we dropped back down. But now that number has adjusted, and I won't get real specific because that's what our subscribers pay for, but it won't take a lot above the recent high, the high of where we closed last month, which was 2350 area. You get up about $1 above there, it's going to look pretty good. So you don't have to go back to the November highs that we saw in the gold miners, the rally high that failed, and which was above 35 on GDX, for example. We don't have to go above there to break out. And silver got up to 20 in the mid-25s. You don't have to get back there to break out via our metrics, in which case we will issue a report saying, okay, we're full. It's a full court press now. All the metals are in agreement. And I think that probably will be somewhat coincident with the fracturing of the stock market. Fracturing of our numbers, that is. And again, our numbers aren't that far below. So you get to our trigger numbers, and we're not going to have alarm in the Wall Street Journal. You won't be breaking stuff that's too obvious, but for us it'll be obvious. And I think at that point we can say, okay, there's an asset class shift underway here that's going to gain steam.
All right, so real quickly, Michael, higher or lower at the end of 2022? Gold, silver?
Oh, higher, much higher.
A dollar?
Dollar lower.
UST bonds?
I'm
You're
going
not
to guess
sure?
the dollar, which is now in the mid 90s, could be in the mid 70s without a lot of effort. In a span of a year or two. Yeah.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.